Let's now quickly hear from Mr. Ikechukwu Duru, the Chief Executive at FSDH Securities Limited. Thank you very much for coming through on Capital Markets this evening. Before we quickly go on break, let's hear from you, your thoughts on these earnings that have come in this time, the way they've shaped investments in the markets.
Basically, the earnings is like the listed companies had decided to shrug off some of the challenges that we had in 2016. You could see that year to year, the earnings show remarkable growth. Actually, in their 30-something%, almost on the average, except for few companies that had marginal growth. So we see these things will come this year as companies rejig their strategy to actually look at the economy and harness the opportunities in the economy. So we'll see this earning growth throughout the year, and that's the confidence we'll have in the market.
All right. Let's take a look at Lafarge. Lafarge Africa is one of the companies that released an impressive result this time, and analysts have said that this is an indication that the company is back into profitability.
Both analysts and investors, they have strong sentiment for Lafarge. And the result they released is quite impressive, in the sense that there is over 55% growth quarter by quarter to end 31st of March. And this impressive result comes from the fact that there is serious cost savings. I mean, the cost had come down from nearly 86%. I mean, the gross margin had come down from just 14%, and now it is at 24%. This is remarkable. And that, will translate to higher profit margin. It will translate to more value to shareholders. So this will actually excite the market. And, during the trading period, we'll see their stock appreciated, all over throughout the trading period.
Just like the expenses also declined quarter on quarter to like 21%. Because of time, let's look at FBN Holdings. Yes, they had delay in releasing the 2016 results, but then it came in and then it was also released with Q1 2017. Talk to us about what you noticed.
Okay, the FBN result was much awaited, and because we have seen their 9 months result, I mean their third quarter result, and when we looked at the full year results, what we were able, I mean, it didn't beat analyst expectation because we saw the loan provisions, I mean, the loan losses gross up to 40% of the total income. That translated to lower profit margin for the bank. But what we have seen in the first quarter result is that those loan margins loan losses have come down drastically. And we can see that the expectation is that these loan losses have been taken care of, all the sticky assets, so that we can witness significant growth going into 2014. Because looking at the first quarter results year on year, we showed remarkable improvement, and also when we looked at them at the absolute terms, means that they are going to surpass the gross earning they had in 2016.
Well, that's of course translated to what we saw in terms of the top line performance. And you're saying that this is sustainable now. How would you say that the FX devaluation, Naira devaluation, and of course trading on FX shaped things for them? Did it change anything?
What we saw in 2016, most of the results that came, the significant part of the income came from FX revaluation in almost all the financial institutions across the board. But what we have seen in 2016 is the main business of the bank, that is interest, interest and investment income are constituting the major portion of their earnings, and this is what we call sustainable banking. Because if the banks do what they're supposed to do, give out the loans they're supposed to do, have robust risk management, we can see that the loans, the interest will grow, and that will actually translate to sustainable earnings for the banks. And we can see that across the board from the first quarter result we have actually seen.
Okay, let's move away a bit from the banking sector now and take a look at Nestle, for example. That's a company that actually posted some very solid results this time, 69.3% in terms of revenue. That's for Q1. PBT, 63.7%. PAT, profit after tax, 25.1%. Talk to us about this.
Nestle is the leader in its own segment, and we have seen that the company has actually reinvested their businesses all over the country. Yeah. Bringing down their cost of operations, which is very significant for a company like that, and also to moving their factories outside Lagos, that will actually bring down the cost of operation also. And then also, as the Northeast is actually opening up for business, we could see them do a lot of sales. Right. And also, don't forget that there have been a lot of price increases, giving them, more leverage or more margins, so to say. So we see that translate into their profit, into the top earnings they have posted. So if these earnings are sustained throughout the year, we could see a remarkable improvement in their pricing and also in the returns to shareholders.
Okay. Guinness is another company. That's a brewer. I'm not too sure that is going to be, that's a company that will actually work out well in the Northeast. Well, let's take a look at its earnings. Its third quarter came in this period, and that's gross earnings, 89.87 billion naira, PBT and PAT, PBT being 2.46 billion compared to 1.2 that it had in the same period a while ago. Then PAT is 2.55 compared to all the other numbers that we've had in the past. This shows some kind of improvement. What would you say has changed suddenly?
We have seen Guinness in the last 2 years struggle with their results and their performance. So what we have seen is that the strategy is expected to have changed. And when the strategy changed, we could see them push a lot more in the market, try to manage their costs, especially, the FS, their position in FX, because that constitutes the major part of the cost.
And that means that FX actually shaped this performance for a lot of companies this period. In 10 seconds, let me hear from you. What do you make of the performances of these companies by Q2, if anything changes by way of inflation? Because the last inflation had increased in terms of month-on-month basis.
So what happens in the companies is that these companies adjust. They adjust to inflation.
Okay. And
a lot of companies are planning given the template they have now. So we won't see the inflation being a significant influence on their performance. What we'll see
later on.
Until later on in the year.
All right, Mr. Ikechukwu Duru, thanks a lot for honoring our invitation on Capital Markets. Thanks a great deal. Mr. Ikechukwu is the CEO at FSD Securities Limited. And that's all the time we have today on Capital Markets. I'm Temple Ashaju. Thanks so much for watching. I'll see you next time.